Today we're talking about mortgage interest rates. Are we going into a recession? And what will happen to those interest rates if we do in fact go into a recession? Before we start, I'd like to talk a little bit about a misnomer I get asked about all the time. And what causes mortgage interest rates to fluctuate? What causes them to go up? What causes them to go down? A lot of people hear on the news that the Fed is meeting and they are raising interest rates 0.5%. And they think, oh my God, my mortgage rates just jumped 0.5%. And that is not true. That Fed rate is not connected or tied directly to the mortgage rate. Mortgage interest rates follow the 10-year Treasury yield. This is a graph that shows the past 50 years of how the 30-year mortgage rate moves almost in unison with the 10-year Treasury yields. The line on the bottom is the 10-year Treasury yield, and the line on the top is the 30-year mortgage rates. And you can see for the past 50 years, they're almost identical lines with that small spread of 1.7%. So when you hear on the news that the Fed is bumping interest rates, that is in fact not going to cause your mortgage rates to increase. In fact, one of the reasons the Fed increases their rates is to curtail inflation. And as inflation starts to come down, interest rates will follow. It's been a crazy year for interest rates. We started the year in the threes, and boom, they skyrocketed. In this graph here, we're showing from January 2022 until today what mortgage interest rates have done. And you can see they jumped up quickly, but they have in the last month or so stabilized. They're fluctuating a little bit, but they're not continuing in that upward trend. So we're hoping things are going to stabilize a little bit. What this big jump in the mortgage rate actually did was, at least in the Sacramento area, I'm hearing that it's happened throughout the country, but in Sacramento, the market really stopped. Buyers kind of put the brakes on and went, whoa, what's going on? And it would make sense. If you went and were pre-approved for a home loan in January and you're at a 3.5% interest rate, and you've been looking for a while, and all of a sudden your rate jumps to 4.5 or 5, you got to figure out how much home you can buy now. You're definitely not qualified for the same amount that you were 2 or 3 months ago. So obviously buyers had to go back and check in with their lenders, and it caused a real slowdown in the market. But now that things are starting to stabilize in those interest rates, we're starting to see the buyers come back out. So the next big question is, are we going into a recession? If you look at historically, when the Fed raises interest rates as quickly as they have been in the last few months, we're going into a recession. It's happened, I think it's within the last 100 years. They've had rate spikes like this 9 times, and 8 of those times we went into a recession. It may not be a long recession, but we went into a recession. So expect it, but that might not be a bad thing. Typically, during recessions, interest rates for mortgages come down. This graph is showing the last 6 recessions since 1980, and you can see how long the recession was and what happened to mortgage rates during that recession. So the recession of the 1980 lasted 6 months, and interest rates jumped or dropped from 16% down to 11.8%. Nice big drop for us there. The recession of 81-82, interest rates dropped from 18% down to 13%. The early 90s recession. The early 90s recession lasted 8 months. Interest rates dropped from 11% to 8.8%. In the early 2000s, another 8-month recession. Interest rates dropped from 7.4% to 6.8%. The Great Recession, that's when the housing market crashed back in 2007. That recession lasted for a year and a half, and mortgage rates dropped from 6% down to 4.9%. And then we have the COVID recession. It was a short one, only 2 months, but interest rates dropped a full percent. Interest rates went from 3.8 to 2.8. So if we talk historically during a recession, interest rates are going to come back down. We're probably not going to see 3% interest rates ever again. 4% is probably doable, but I think those mid fours, low fives is probably a place that we may end up once everything settles down, sticking in that realm for a while. If you're thinking of buying or selling in the next few months, check out my buyer and seller guides, absolutely free. Click the link below. I'll email that out to you directly. And please subscribe to my channel and check out my other videos up here. Have a great day.